Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 3rd of May. So I've seen some big action this week. The volatility is definitely in the markets, and we've got a non-farm payroll to deal with in the next few hours. So let's jump into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD, and we can see the big volatility over the last week. We can see very, very big range candles, basically for the whole of the trading session. You can see here we've got a big move up on the Monday. It reached highs of 65.80 on the cents, and then all the way back down to that sort of 64.80, big 100-point range. But for the most part, it was happening in very big range candles and very full candles, not much wick action at all, which meant that the direction of the buyers and the sellers on each particular day was very steadfast. So look, that being said, it's effectively returned back to where it was on the Monday. So aside from all of the movement, we are back where we were. So around that sort of 65, 70 area is kind of where we lay. It's a bit of an interesting area because look, the support level has been pretty strong at that 64.5 to 65 cent mark. You can see here it held up very strongly right through this area here. It had a big resurgence once it did sell off through there, and now it's pulled back to that level again, and the moving averages are helping catching it. So in my mind, if we do get past this level here and we get a daily close above that sort of 65.90 area, which is the peak through here, I would be looking at the highs back up to that sort of 66.20 as your scalping zone. I still think we're caught up in the middle of this channel to an extent. So, we're still going to find more than likely resistance at around that 66.30 to 66.50 mark right through these wicks here. So pretty good to aim for that level in the first instance. Go to the smaller time frames and look for series of higher highs and higher lows on the smaller time frames and aim it to around that sort of 66.20. I think if we're still in scalping mode, we haven't broken out into a direction yet. So really trading is about understanding what you're actually working with. And at the moment, we're working with a sideways market. So trade within those bounds. If we start to see weakness here again, then all we need to do is actually shift our focus to the lower high, lower lows and start aiming for that sort of 64.80 mark. And that's a pretty good support zone there as well to help catch it. So stick within this zone for now until we get a daily break of either side. All right, we'll move over to the US dollar CAD. And as you can see, we've had also very, very big movements here as well. Like it certainly exploded off the 20 moving average, which is what we wanted it to do after it touched that 138.50 level, which was pretty much spot on to where we needed it to be. Came back down and touched the previous resistance, which would now be support, and then off it went. The fact that it failed to make an equal high, to the tune of about 60 or 70 pips, is a little bit of a concern for it. We normally, when we've got strength in the market, we see higher highs and higher lows, no matter what the time frame is. And this one did fail to make an equal high, let alone an all-time, or not an all-time, but a move higher than the 138. So that does start to concern me a little bit that it didn't quite reach the levels. Now, yes, it has been impacted by a lot of the news that's going on. We know that we're in the middle of an earnings week. It's coming to a close now. Like most of the earnings are nearly gone, but we've still got a little bit to go, and we've got non-farm payroll tonight. So I think this will probably help settle down early next week for sure. So I think that we're going to see a lot more direction next week because all the volatility should start to eke out of the market a little bit. If we hold up here at support on the 20 moving average, we can look for one more move higher back up to that sort of first level. That would be my first target zone. In order, I wouldn't be trusting that that's going to go straight past there. So probably look for that as your first target and a secondary target of the previous high. If it fails here and rolls over and continues to sell off and moves past here, the next logical zone is going to be that 136. So very much scalping on this one as well. We haven't got big ranges to go with. Just use what we've got and you just appreciate these levels for what they are. They were very, very strong all the way through here and up there. So really they're the boundaries that we're talking about until we get a daily break on either side of them. Still good trading to be had, but just keep it inside those zones. All right, we'll move over to the US dollar. From a currency standpoint, this has been one of the most volatile in terms of how it's actually reacted with the market news. You can see we've got a very, very big candle here with big wicks, big range, and a relatively small body. And that was basically at the start of the week. And you can see that even though the rest of the week did actually sell off, it was actually a fight for nearly all of it. You can see that was a pretty reasonable, attempt to move higher, same body as the previous day. But then the very next day, on the Wednesday, completely sold off and tried to break through the 20 moving average and actually did retrace to it. And the next day again was a fight. Even the current day is a fight. You can see it tried to push up to the 156.20. And it's finding itself at that low at 153. These are big moves. You're talking about hundreds of points at a time. So the party could be over on the US dollar yen for a little bit. It looks like it's really, really wanting to try and go lower. So I would be very, very mindful of this one. When I see them trading like this, I would prefer to probably leave them alone. We've had a lot of joy on the way up, which it's been really, really good to us. But the volatility, when it's spiking like this, can be very, very difficult to trade. So generally, I sort of move away from those. The next real zone for it is around that sort of 151, 40 to 50 area anyway, which is all of this resistance through there. So if it gets to that point there, it might find support. If you're hell-bent on trading it and it's going to continue short, that's the level that I'd be looking for at the first instance, followed by that 150, which is all of these peaks through here. But just be careful of that one because there is certainly a lot of volatility. And if it does break through this level here, you would think that it would gravitate more than likely to around that sort of 150, 150. So that's the first level of support and the first place I'd be aiming for on the short. But on the long side, I think I'd just be leaving it alone for a while until the volatility settles down. All right, over to the dollar index. The dollar index is trying to break down. You can see it's had a few days where it's been very big range of movement as well. Like you can see, it hasn't done this in a while. More than likely, we're going to see weeks and smaller days. This has been a very big week for it. Up, down, and now another day down, trying to break the 20 moving average. If we get past this moving average now, the next level of support for it is the 105. So about 40 points from here would see the very strong level of support banked on with the resistance that we can see here from February and also here in April. So that would be the first target and also coincides with a 50 moving average. So wouldn't be the worst place to land and find support, but I wouldn't be just jumping in at that point. I'd be waiting for it to find itself some strength. The euro, of course, is the one that we'd be trading in that instance, and you can see that it's bubbling over. We've got very similar candles underneath the 20 moving average, but it's trying very difficult to get. It's trying very hard to get past this difficult zone. You can see here the 107. It did break through, but now it's trying to trade above it, and it has done so basically 5 days in a row, and it's trying to get above that 20 moving average. So if we can get above those wicks and the daily close above that 107.50, then I'd be looking for long opportunities. There is a bit of resistance there. That's why it has to go through it. But if we can get a close above that 107.50, which is above all of these zones here, then a move up to that 108.50 would be a likely scenario. You think it'd gravitate up there quite comfortably. So looking like it wants to higher high, higher low, but we need to get a daily close above there. If it rolls over and gets pushed down by the 20 moving average again, I'd be just looking at trading down to these previous lows as a scalping mode, but only scalping, not looking for anything big or long term just yet. All right, and the S&P 500, the final one, obviously a very, very volatile week. Earnings is going to affect it more than anything else. We can see that it pulled up to around, it was about a 38.2 or a 50 fib, depending on where you drew it, off that whole length or the three-quarter length. Pulled up by the 20 moving average, good fib levels, came down. It's trying to find the resurgence here. You can see we've got a lot of price action. That was a big, big negative candle. And the previous day from today was obviously a very negative candle in the sense that it didn't like what the Fed said. It initially went up quite significantly and then sold off very, very aggressively and ended up being a very interesting doji candle. So it was very, very negative at that point, but it has picked up today and it's trying to push up higher. No question, it's about 1%. It was trying to get up 1% on today's trading, but I think this is all about non-farm payroll tonight. We need to wait and find out what those number releases are, and we're going to get a lot better idea on Monday as to which way we are tracking with the S&P. So in my mind, it's pretty straightforward. If we get a daily close below the 5,000, and that's where we're trading on Monday, we look to push down to the 49.50, And if we're trading above the 51 sort of 20 area on Monday, then we start to look at moves up to that 51.80. We're still stuck in the zone. I'm not looking for anything too exciting on it, just really scalping until we get a very clear direction, which we haven't got. But now that earnings are nearly out of the way and the big news is out of the way, we should start to see some good direction forming. So stick with the boundaries of the 49.50 and the 51.80. And whichever way the daily closes on Monday is the way I would go with it. All right, so I hope everyone's had a great week's trading. We've seen some really, really big volatility this week, and yeah, it's set to continue over the next 24 hours, and hopefully we'll get a little bit of steadiness next week. So have a great weekend. I look forward to seeing you then.